What's going on, everybody? It's Luke here again, bringing you another Mr. FBA UK video. Today we're talking about VAT. Now, I've gone on about VAT maybe once or twice before, but I'm going to be I wanted to double check some aspects of it before with some accountants, get their opinions before I did like a sort of a foolproof video on it, because I've mentioned that things that I do to sort of offset my VAT charge or liability every quarter, and I've then expanded on it further to see if there's ways to try to reduce it to the point that to the point where you don't really see any actual effect compared to a person that's non-registered, because obviously everyone that's not registered for VAT, everything they make is theirs, but when you register for VAT, some of that, well, 20% of the turnover, which is not what you actually get back from Amazon. If you do 10 grand sales, you only get back 5. Yeah, you still have to pay 20% VAT to HMRC on the £10,000. So yes, you don't pay it straight away, but the money you're getting back is not all yours. When you are obviously non-registered, that is now yours. You can do what you want with it. There's nothing, the only thing you will have to obviously pay will be if you're a sole trader, which is your personal tax allowance. Not allowance, but personal tax, or if you're a limited company, then it will be your corporation tax, that sort of thing. So I'm going to go over two parts of this. I've already mentioned many areas of this, and some people might watch this video and think it's a load of crap. And if you do, awesome. And I'm sorry, but this is just what I'm actually doing myself. Okay, so this is actually what I'm doing. I did it for January. I'll probably do it for Q1. So that's at least my short-term plan with this strategy, so that I can, because Q1's the crappiest, slowest, whatever, it is difficult to sometimes build massive momentum in Q1. For me, I'm using it as like a restructure, refresh, get stuff like, I don't know, like Q1's like a stepping stone for the rest of the year. And to do that, obviously, I want to retain as much money as I can. I want to pay out as little as I can in expenses, and I want to be paying as little tax if I can, and that sort of thing, so that I am building up a little bit of a sort of a positive momentum going into the rest of the year. So the question is there a way you can be better? Does that even make sense? You can basically be better off once you register for VAT. And also, this is not financial advice, because whenever I watch YouTube videos, that is literally the one thing that any person doing videos will say, because I guess people are getting sued and stuff, mainly probably in America, I guess, because they're not there. But just so you know, not financial advice. This is for entertainment purposes only. I think that's something else they say in the videos. Right, let's just get started so you can see what's going on. So this is actually what I'm adopting as much as I can. Now, it does depend on your circumstances, because there are things that I do that others won't do, and you might even see this and think you're too big of a seller. Maybe your ambitions are to do some stupid numbers, which is what I've had before. But I always find that it's always good to be sort of fluid and adaptive when you're doing Amazon business, trying different things, seeing what works. Just because you're doing more sales doesn't mean you're making more profit. So I've been, through the years, I've been changing everything, just literally just trying everything there is, to find the best sort of mix. And once you know all the different areas and you've tried it all, you should be able to form some sort of strategy going forward. So we're going to talk about these 3 sections: VAT leverage, which I've mentioned in like 2 maybe other videos as well. We're going to talk about what I call my 0% VAT system, and then I'm going to combine it with the 0% VAT system and VAT claimback system. So it's like you can use, when I mean system, it's like my plan, my method, I guess you call it, VAT system, whatever. The method that I've not really come up with, because it's really obvious once you actually just look at it. But a lot of people, I feel, they look at VAT, the threshold, and they either think, oh my God, I want to stay under it as long as I can, or I want to smash through it. Now, they don't really do any strategic planning in terms of what they are going to be, how they can reduce and pay as little, because obviously the more VAT you're paying, the less you're able to reinvest into your business, and the less you make overall, and so on. So you sort of, you do all this work, and then loads just gets taken away, and you end up not really making any forward momentum. So, and that's what I found when I registered. So I've been registered for about a year and 4 months, and I found that it was great going over and doing, whatever. You want to definitely smash through it if you're going over to do, you want to at least do a double. So instead of doing 85 grand, you look to do 150, 200 grand a year turnover. That's what you really want to be pushing in. Obviously, during Q4, you're probably going to hit 85 grand, most sellers anyway, and that's not even that high, is it? Yeah, no, that's like 25, 30, and 30, or whatever that, whatever it is, which is pretty mediocre, I'd say, in terms of sales over Christmas. So the VAT leverage system, I've gone over this many times, many videos, and this I would say is it can be low to high risk. Now the reason that it is low to high risk, it depends on how you want to approach it. So it depends on how you are as a person. For me, I perceive debt and all that as not really real. I don't know. It's just how I've grown up, I guess, and how I've done it. Because a bank, if a bank has £1, that I think they are loaning and giving out £10 for every £1 they hold, something like that, some stupid stuff. So it doesn't really exist. It's just like the psychology of it. It's more, it doesn't really, this doesn't really exist as such. They haven't got the money. It's just because no one's going to want to withdraw enough money for them to have to, whatever it is. I don't know. I looked into it one time anyway. So I see it as I'm probably medium to high. So the way I do it, what I mean by this, I like to just describe what I mean, is I have a VAT bill every 3 months. So every quarter I'll pay. So my VAT quarter that's coming up is in April, but I have to pay by the April, pay and submit all the details basically, and by the 7th of April. So the way it works is that you have 3. So when you register, let's say you register on the 1st of, so my quarter, the quarter I'm going to have to pay in April is for the quarter December, January, and February. And then the end of Feb is obviously the end of the quarter. So this month is the end of my quarter. And you have to then pay that bill, the VAT bill, on those 3 months, a month and 7 days, within a month and 7 days. So you can do it at the end or during or whatever. So if you take the previous quarter, I had before the one I've already paid, that I paid in January, it was September, October, November. I paid in January. So I am basically making sales in September, October, and November. Some of that money that I'm getting back is not mine. It's got to be paid for VAT, and I'm going to pay out whatever the amount is in January by the 7th of January. Okay. So I know people that will take, let's say it's 3 grand. Let's just say it's 3 grand, for example. I think I paid 2.5 maybe, but let's just say 3 grand. So you get, I don't know, 1,000 in September, 1,000 in October, 1,000 in November. Obviously, it's not quite like that because obviously Christmas time period and your sales change, but that's just an example. And people put it directly into the bank, or whatever the difference is. So they'll have a look that month, find out the VAT, and then they'll put that into a separate bank or into a savings somewhere different to where their current balance and their day-to-day cash is, I guess. And what you would do with that is you would then save it up and then pay it when it's due. Great. The way I do it is let's say I get £1 grand in September. Okay. So instead of putting it anywhere, I'll think, well, okay, I've got £1,000 here. If I reinvest that £1,000 in October, yeah, what can I do? Let's say you can get £500 profit because October, November starts pushing into Christmas. So I'll be conservative. I can invest that £1 grand at the end of September, and by the end of October, that £1,000 can turn into £1,500. Okay. So actually, my overall liability in September is then netted against the £500 and the grand, because I've just made £500 for money that isn't mine. The difference is only £500. So my actual overall that I need to pay, the difference is I'm going to have to pay. If I looked at my profit and loss at the end of the quarter, it wouldn't be that I'm losing, I'm paying out an extra grand. I'll be paying 500 because I've used that short term. I've used that money that I need to get rid of to make more money. When a lot of people put it in the bank, which is making nothing, so it makes nothing. But then what can I do in September? End of October. So in October, I have another grand. That's from the sales in October. Well, now I have £2,500. So I've got £1,000 from September, the £1,000 from October, that is the VAT, and now the £500 profit. And then I have £2,500. Well, I still don't have to pay it out till January. So I'll reinvest it at the end of October into November. And in November, maybe I can make £1,500 on £2,500 because it's now November. Sales are faster. Yeah. So I just cut that short. The guy came to pick up some stuff. Sorry. So then you have October. You do the same thing into November. And then in November, I now have all of those months worth of VAT and the profits that I've made against those amounts. And in December, you might even be able to double that. So say you've now got like £4,000, £4,500, £5,000, which, some people would never have even used any of it. So I've now generated extra profit, which actually goes against. So at the end of it, so when it comes to VAT, yeah, you'll still pay that £3,000, but I may have made £4,000 profit from the $3,000, definitely over Q4. Because in the say that I have £4,500 end of November, if you got the right product leads, you can double that in December. So then what happens? You double that £4,500 or whatever it is now, £5,000 or whatever the hell, I forget the number, all those profits, but you get the principle behind it. And then you actually say that you can do another £4,500 profit, even if you do £3,000 profit. Well, that means the profit you've made off the VAT is paying for the whole quarter's VAT, and then all the other profit made in the other months is bonus money. So you've actually made money. Yeah. Now, when I say made money, I know that if you weren't VAT registered, you would have had that anyway to make profit. But what this is all about is trying to reduce your overall VAT bill so that you are not getting affected in a way that is making it detrimental to getting VAT registered. You want to try to flip it so that you're even trying to make more money than the people that are. So if you're just under this limit, £85,000, so that I know it's done in a 12-month cycle, but that's the same. You are going to register. You want to and then there's a person that has registered. So your overall sales are like not much different if you look to the total, but one person's just under the threshold, one person's just above the threshold. Then you want to try to get it so that by being above that threshold, you are either being the same as a non-VAT registered seller, so you're able to be as competitive as them, or there is a way I figured out to make more money than that person. So you are actually making more profit than the person who is just under that threshold, which I'll go over in a bit. But there are pros and cons to this whole concept. So this whole trying to make more money, I haven't gone over just yet, so this will be in a sec. But one way to try to offset, obviously this isn't the VAT leverage, what I just went over, isn't going to work year round. Yeah. So in January, February, and March, it might be difficult to get that. So let's say now I pay my VAT, but now December's money I don't pay until April. So December's VAT, but it's very difficult to get that, £3,000. That, because obviously you do quite a lot of sales in December, so to get that £3,000 and try to double it or make £1,000 in January, because in January, nothing really gets sold is hard. So it's going to be, you might only make £100 or £200 because you just can't get the sales volume through. So you could reinvest that into stock, sure, all of that VAT into stock, but you might not actually be selling enough to really make that much of an impact on the difference. So of course, this is not, this bit is maybe, let's say you can best utilize this in Q4. You can make some money in Q4, yeah? And the rest of the year, maybe you lose money. Well, okay, we've now gained 25%. If you look at the whole year, like 4 quarters, in 25% of the year, you can gain some money and you lose in three of the quarters, yeah? Well, for anyone that's VAT registered, surely you think all year round. So you've actually gained 25% overall. You get what I'm trying to get at? And that's just something I adopt. And then as you get closer to the VAT time to pay the VAT, you just don't spend as much. You rein back on your spending. So obviously get enough money come back in your account to then have to pay it, or you start to be a little bit more conservative. Let's put medium. A little bit more conservative in, say, December. So you say, well, by about the 10th of December, I want to be careful because I want to make sure I got enough money to pay my VAT liability. Sure. So maybe you don't want to reinvest all of that money. You want to only invest half. Now, this is where I say there's a risk element to it, because let's say if your account gets suspended and all of your money is now tied up in stock, well, how do you pay your VAT bill with Disney dolls or, you know, Kinder Buenos, or I don't know what you're selling these days, but yeah, you can't. So, and you can't, and then that's why it is a risk element. But like anything, if you have a business, you are already you've already weighed up risk to now start a business, because there is always risk attributed with businesses. Like loads of entrepreneurs have been bankrupt many times because that is the sort of mindset you've got to be in to be truly successful. So it depends on your limits. Maybe you want it as a part-time income and you don't really want to care about any of this. Fine. Like if you're making your grand, having 100 no risk or limited risk, just ignore it. And that's what I'm saying. This is just the way I'm doing it. The way I do it, it does depend on seasonality and stuff. So I can't really utilize this as much in the year. Mainly in Q4, which is probably the best time to be able to utilize it. But yeah, so okay, we'll move on. And if you've got any questions, let me know. I've gone over this a couple of times in my other videos too. Well, this section. But I know many people that just print in the bank, so they're making no profit on that over Q4, which just to me sounds ridiculous. Like I just can't. Yeah, it just sounds silly. But yeah, as I said, and let's say you want to reduce the risk. Well, let's say as a £1,000 VAT that you've got from September, maybe you want to put half in September for October, and then October you want to do half again. Move to November, you only use 25% of that VAT, and that way you're offsetting. So you don't have to make too much back if an occurrence occurs, something occurs and there's a problem. Anyway, I've gone over this a couple of times, and that's not the video. This is just a little side thing I thought I'd add for anyone that just wants to have an option. Okay, that's more of an option, But this is what I want to talk about, the 0% VAT system. So you can't be on a flat rate scheme, okay? So there's a couple of different schemes you can do as an Amazon seller, where you basically flat rate is where you just pay a flat rate as it is. You just pay a percentage on turnover, that's it. No, you don't claim any expenses, VAT on expense, you don't claim anything back. It's just one set amount every quarter, done. So you have to make sure you're on the standard 20%. Now, with this, it's basically mainly applying to grocery products. So as you may know, most grocery products are 0%. Now, when I say grocery, it's very difficult. It's a very generic category. There's lots of things that could fall under it, and it isn't everything. So things that are, this is actually completely true. But Nesquik, chocolate Nesquik powder, what's it? Milkshake powder, you get what I mean? That is 20%. Strawberry and banana are 0%. I think it's because anything that has chocolate in, if it's anything over 30% contents of chocolate, it is classified as a luxury product. So anything that you would think as a luxury product is normally 20%, because it's all an old system, really. It's an old thing where you don't get charged VAT on things that are a necessity. And the best way that I did it is on HMRC. I can't remember. I wrote it all down once. There is it's more like stuff like jams. It will say jams for cooking, or like preservative, like sauces. But and you have to then you figure out where those products fall. And of course, yeah, it's not going to be perfect. It doesn't actually tell you every product and what they come under. It's more like the sort of area. So like tissue paper is this, or maybe it's not even as obvious as that. It's like tissue products, which could be like toilet roll, or it could be hand towels, or that sort of thing. It is, you will, I mean, it wasn't too much, but too difficult for me. I spent like 45 minutes just writing down different things, and mainly it was just I went over what I was selling already and try to figure out what they would fall under. So the way I did it is in January, before January, I decided that in January I was gonna reduce all my expenses and just sell groceries, or mainly groceries, maybe a little bit in beauty, a handful of toys, but most of it is going to be groceries. Now, because obviously I didn't want to be scarce in what I was selling on purpose for any reason, I just wanted to try to offset. So I'm obviously registered for VAT. Now, on a lot of the groceries that I sell, it's 0%. That's say 80% is in what is grocery for me, 0%. Now you can get that to 100. Now, if you were really smart about it, you could get this. You could get 100% or 99% of your products as 0%. It doesn't take too long. Like even bundles, a lot of you can get one of something, and then there are bundle versions of it, like 2, 3, 4, 5, 6, 7, 8, 9, 10 pack. And obviously they're still going to all fall under 0%. So you're creating potentially 7 product leads or 7 different listings, all 0, but you do that against 200 or 100 different grocery items, that sort of thing. So you can be, if you're smart about it, you can. If you definitely are doing wholesale, that will open up a whole new sort of range of products that online arbitrage probably doesn't cater for. But I mean, I just did it for my replenishables. I built up a replenishable list all last year in mainly groceries and actually a mixture, and I just focus on that. And yeah, I basically haven't done the VAT obviously for January and February because it's payable April. But when I go to do it, it'd be interesting to see what that comes out as. But you can get that to 100%. So I believe you can get, so this is where you'll have limitations, and that's why really this will have to be like used in conjunction with maybe other things. So you obviously might have, I'd say 50-50, or it just depends on your account. If you're a seller doing 30-40 grand a month, then this is obviously going to be less because you're not going to be able to cover. You're not going to be able to find enough products to cover all groceries. So this is where you are, it's to and from, you a little bit, you get what I'm saying. So I feel you can do, on this system, you can do it about 12 to 15k a month in sales. Because I tried it last month in January, and I didn't even start sending in any products till the 7th of January. And I did like 9.5 grand on pretty much just groceries. I can't remember the percentage now, I haven't checked. But I looked, and yeah, very good. But again, it's January, worst month of the year, and I didn't actually start sending stuff until about the 7th, so it probably didn't book until at least the 10th. So that's a good that's a 30% through the month. Let's say you get through the first 1 or 2 months. Probably February is going to be a little bit slow too, but you get into March and through the rest of the months, then it will start to be very consistent, and you can build on new replenishable lists. So because you're focusing on that, you will be paying attention more to it, and so on. But yeah, as I say, it's 12 grand to be relatively consistent. That's definitely I'm 99.9999% sure that's achievable by probably February this month, but that's the same March. And you could and my expenses are like £80 a month. I think I spend £80 a month because all of my they're all replenishables, and they always have. That's basically how I'm doing it. Short term, I'll change it as the year progresses. You can make 2 grand. You can make 2, 3. Let's think. 12 grand. That's pretty. You can make 3k profit. But you're paying VAT. That's it. You're basically paying no VAT. And let's say you're paying some. Okay, let's say you haven't got 100% groceries. Well, you're not paying, 100%. You're only paying like 10 or 20% of the. So you wouldn't actually be using that 12k to see what you have to pay VAT on. You'll be using 2k. Let's say you do 2k. Obviously, 20% of 2k to paying VAT is going to be a lot different than paying 20% of 12k. Yeah, and it will just, so it depends on where you are as a seller. If you're lower, if 10 grand a month is great, then do 100% groceries, and that's still, you can do 100. That's 120 grand if you were just doing 10 grand. So obviously that's over the 85,000. If it's still 85k, maybe it's gone up a little bit. A year threshold, and 100, and that's only if you were doing that every month. Obviously Q4, as discussed already, you can use this tactic and this tactic along with everything else. Let's say you're going to triple 4 times this. You're going to use this system with this system over Q4. Well, as I mentioned, yeah, there will be VAT liable, but if you can actually make profit on that money, then you go straight back to this system in January. You might pay no VAT ever. If you're smart enough and you play it right and you do the right calculations beforehand, you'll be able to pay nothing. And let's say you do pay a little bit of VAT, yeah, because I definitely do. It's very difficult to make sure 100% of your items are always going to be zero VAT. So what I can then do is you can also do a VAT claimback system. So when I say system, it doesn't really mean that. I mean, it just makes it sound like it's an actual system, a HMRC or something, but it's not. It's just something that I created, and this isn't even me creating it. It's quite this is just sort of common sense, I guess. Once you look into it a little bit. So okay, so you're paying 0%. So this is where I said someone who's underneath the 85k threshold or someone that's just above the 85k threshold, that person that's just above it, or even wherever they are, can make more profit than this guy. This is how. So as soon as you're VAT registered, what can you do? Let's say you're paying no, just for this example, no VAT. You're doing 10, you're doing 10 to 12 grand. It's hard to say, but let's say you can do 12 grand, 100% groceries. That's probably about right. Unless you're doing wholesale on top, which means you could probably go up to 20 or I don't know, something stupid. I don't know because I haven't done it. Don't do it. Well, then what can you do? You can claim back VAT on all of your costs. So let's say you have a prep service. Well, let's say if you're doing if you're paying £500 a month on prep service, yeah, they're probably then charging 20% VAT on top of that. Well, you can claim that back now. Now, £400 or £500, that's almost around 100 quid a month that you can claim back. What else can you claim back? Oh, if you use online arbitrage deals, for example, and you're getting, product leads, you can claim that back. Or if you're using, I don't know what else you're using, accountancy fees that I pay every month for my accountant money. They charge me VAT. I can claim that back. I can claim them. If I go away, that online arbitrage summit in April, is it? Yeah, April. Get a hotel because business, expenses and all that. You can claim the VAT back on that. If you do self prep at home, maybe you do self prep at home. You can, all your boxes that you're buying, your prep stuff, claim the VAT back on that. Oh, what's happened now? You're paying you're paying no VAT, but you're claiming back £100 a month, £200 a month. So what does that mean? That means you're gaining £200 a month that you wouldn't have gained if you were that guy that was just under the £85,000 limit. So that guy, maybe it's your friend, just for this example, he's just under. Well, he can't claim any VAT back. He doesn't pay any VAT either on his products. So you're both okay there, but what will happen at the end of the quarter? You'll get a rebate for all of the VAT thingy-majiggy here. And even if you are doing, say, 80% on groceries, let's say, well, maybe that VAT claim back actually offsets the 20% that you're paying against what you're claiming back, and the difference is almost nothing. Of course, if you want to increase everything, then obviously this whole scale thing is going to change, and you'll pay more VAT because you need to get the scope of products. But you understand the principle of what I'm trying to get at. That's more what it is, the mindset behind it all. So there is a way to improve this. And what happens? Yeah, another thing. I just realised I got my notes here. So not only that you can claim VAT back, but what happens when you're VAT registered? Well, You submit your VAT number into Amazon, and then what happens? Amazon don't charge you 20% on fees. So you know that 20% that no one ever seems to know about, that Amazon charge on fees. So obviously on your Amazon seller, this, you know, if you scan a product or you type, you know, you do it on a calculator, it doesn't come up with the fees. So Amazon always leave their fees off, the 20%, which is VAT. So I guess, I don't know, that's just what they do. Well, they don't charge you that anymore. They don't charge you the VAT because you are VAT registered. So they just take it, they stop charging you. So you have to submit your VAT number within a certain amount of time once you're registered, and then they will stop charging you this VAT. And again, the subscription fee, instead of claiming it back, basically, they just don't charge you. I think it's a, what's it called? There's a term for it, self-billed or something, self-billing, or I don't know, something. When I used to work in finance, it used to be something that used to happen all the time. Self-invoice, self-billing, I don't know. So instead of you going and claiming it back, they just don't charge you the VAT. This is on all fees, yeah? This is on subscription fee. I guess it's only like £5. But hey, it's £5. I can get a packed lunch or something, you know? And then shipping, when you send in a box, it's like £5.2 or £5.5 or something for non-VAT, but I pay £4.20, or maybe, I don't know, forget the fees now. So you don't get VAT on that. Oh look, you're not only able to claim this VAT amount back, but you're also not charged all that 20% on all those fees. That Mr. under 85k is getting charged. Yeah. So that accumulated with what I just said, you know, means that you, in theory, this figure can get lower. And yes, you might pay some VAT on some of your items, but overall, against this and the VAT thingy that Amazon don't charge, it might be very negligible. Yeah. Now I know people that say it's overall 10%, net 10% that they pay in VAT. But if you're smart about it, I reckon you can push this number. So it's very difficult until you actually do it. I reckon you can push this number to 15 to 20k. And relatively get this, get the VAT or VAT bill not that high, so that you're able to push to say, what would that be? I say 20k times 12. That's already 240. Let's say 15. Just be conservative. 15. Yeah, that's all right. 15,000 a month, which is not far off this. You times that by the 12. That's £180,000 a year turnover. So you are able to do more than double what the threshold limit is, and there is no difference. So you have now found a way to push, almost stretch that threshold. I don't know why I said it. You know, like push the limits of its capability where there's actually no net difference. And that's saying, and when you get to that point, if you then want to double that, well, because your expenses and everything are still fixed, you might pay yourself £2,000 a salary. Or just because you do double sales does not mean you have to pay yourself double. Yes, you can, but doesn't mean you have to. So then economies of scale come into play. So even then, when after that point, let's say you can't stretch it anymore because there's just not enough products to find, and you have to go into all the other categories, and that's just what you got to do. Well, then because economies of scale come into play, it doesn't matter. But you're able to stretch that threshold because the £85,000 limit is not much. It doesn't take very long, and that's not even what you get back in cash. That's just the turnover. So you could literally make like £1,000 a month. And you could do you could get back. You could do £800 a month in profit, and you'll probably hit that limit, depending on your expenses amount. When I say profit, I mean after expenses and salary usually. But that's a loose term because a lot of people don't take a salary. So when they say profit, I'm gonna talk about it as if before you pay yourself anything, but some money that they can keep, I guess. So it doesn't take long to get to that threshold. And definitely with Amazon, where they take so much in fees and all that sort of thing, and you're only left with the leftovers. And that is the video, because for me, this is, if you implement all of this throughout the year, and that's just this 180k doing £15,000 a month. is only if it was every month 15k. Now, what's going to happen at Christmas? You can then sort of say green light, go on this thing, make profit on that, and kick through your overall yearly sales to, you know, let's add another 60k on. Well, that's 250 grand a year. You're implementing this, so at worst case, you're making zero net. You're losing zero net VAT if you play it right, because you're using that to then make the profit, which is then paying for your VAT over that quarter because you're diversifying into other product ranges or categories such as toys, beauty, chocolates. Chocolate. So you may be going to chocolates then because you can't. That's obviously 20%. Yeah, and then you cycle. It's like a cycle, but you're able to stretch all of that. So in theory, instead of doing 85 grand a year, you can do 250 grand a year, and there's no difference. I'm getting excited even talking about it. Maybe I'm just delusional and someone's going to turn around and say something and I'll just cry in a corner or something because it's wrong. But I've been looking at this for months, all of this. And, you know, I've looked at this VAT level. Well, I've been doing this for like a year and a bit, so it does work. And obviously this is just what I've been expanding on over time, I guess. Just because they pay. Before you know it, you're paying like all your money's gone in taxes, and then you just buy yourself a chicken sandwich from the shop and you have to start again. You haven't got nothing else left. So anyway, I hope I've covered everything, and I believe, well, I don't really do notes as such. I just wrote some bullet points, but I know I rush over stuff like this and it might sound really complicated to some, and if it is, just watch it over a couple of times, I guess. But it's more not understanding all the little bits I go on about, it's understanding the mindset behind it, and the little bits that you can just piece together to actually to do this. You know, if you look at each of these individual things on their own, you wouldn't necessarily think too much of it. It's just combining them and trying to utilize them as best as you can. Because ultimately, we all want to progress and be successful. And unless you look outside the box, sometimes you are probably going to be left behind. If you just follow the crowd, yeah, it's obvious. Follow the crowd, not going to get anywhere. Do whatever, then wherever it may be, where I am. Anyway, I hope you enjoyed the video. If not, thumbs down, I'll cry and cry, or thumbs up if it's good. Any questions, let me know, or hit me up a message in the Facebook group. I'll post this soon today, and yeah, hopefully you enjoy it. If not, too bad. See you later. Bye.